Welcome back, and you're watching Commodity Champions. Let's talk about the crude oil prices now, where the week has been a week. And if you look at all the weeks in 2020 till time, we have closed them all in the negative. The crude prices in last 1 month have declined between 14 to 15%. Natural gas is down 13.5%, heating oil down 12.5%. There has been no support from weather. The US supplies have been higher and the production at all-time highs as well, in addition to the coronavirus impact and the Chinese demand expected to decline in this quarter. Peter, what is your sense? How do you look at the crude oil prices? Is the worst already factored in? Because we have seen prices come down from 71 to 54 for Brent. Do you see these levels holding?
Well, that's the big question, Manisha. I mean, there are too many moving parts to determine whether we're at the end of the game or at the start of the game. And whilst the market was probably overbought when you think about where we put our mind back to November and December, and had such a strong rally to the upside, it really was very, very bullish. And then you had a series of bad news events, and that certainly has been capped off by the might of coronavirus and the demand destruction picture. And now we understand the world's awash with oil, but you're looking at those cuts. What happens as far as containment and where you've got that demand? Is this going to be, felt across other markets? Does it spread to the Vietnams? Does it spread to Korea? Does it go into Japan? They're already talking about what's happening with, the Olympics in Japan this year, in Tokyo. It's putting, again, a fear factor into it. So if the market does become very worried and it only exacerbates the issue and accelerates, then no, there's further downside for crude. That's a given. Where it goes to, no one knows.
Kunal, what is your sense? How much of a further downside in crude are you factoring in right now? And what would be the trade now for crude for the coming week?
Well, I think the present weakness in crude oil clearly shows the vulnerability within the OPEC Plus. No matter from last 2.5 years, OPEC has been trying to keep oil prices stable and make it, they want to keep it above 60-65, but they are completely not able to do it, in spite of the fact that we've already seen a production cut 2 months down, before 2 months. Another production cut, what we've seen, I think this cannot go on like this. So it's showing inherent weakness. The demand growth of crude oil is going to suffer very badly because of the coronavirus, which has hit China. And China is one of the largest consumer of crude oil, constitute of 18% of the global GDP. And there, this kind of crisis which is going on is definitely going to be a dampener for oil prices. But I would not go on with the very bearish forecast at this juncture, because most of this have been priced in. So another a tad lower from present level, maybe $2, $2.50 WTI, maximum $48 for the Brent. Also, we are not going to see it somewhere below $52, $53. So here, I think it should stabilize, because it is already factored in all the negative news. We've already seen a massive correction. 20% correction is what we've seen in oil. So a few more percentage decline, 3 to 4%, another decline, and I think there it should stabilize.
Well, yes, if the OPEC does come out with something, then we perhaps will see some consolidation. If they do not do anything at all, then the markets are slightly nervous, as we've seen them already. But it is the base metal prices also which have been under pressure. If you look at the copper prices, we are down by nearly 7% in the last 1 month. Steel is down by 10%. Iron ore has declined 13%. Almost everything actually is trading in the negative. The Baltic Dry Index, you should take a notice of that, because in last 1 month, we've seen nearly 40% of a decline on that. That is because of the port closures in China, and the transportation, the trade, freight, etc. also has taken a hit here. Peter, what is your sense? How do you look at the whole of this base metal sector? We've seen some buying, and that has been on the back of the Chinese stimulus measures, the government spending, the move on the interest rates, the direct liquidity injection into the markets. And of course, China perhaps will have to do much more of that going forward as well.
There's no doubt they'll have to do much more. But that wonderful Baltic Freight Index is a great indicator as far as ports and transfer of all sorts of goods. So a market like that down 40% is earth-shattering. And then you're looking at what's happened as far as ore, steel, copper, as you mentioned. Those prices have certainly been hit hard, and there's the capacity to even probably have a little bit further softness. It's we're in uncharted waters in so many ways. So that's where we're at. It's a week-by-week proposition or a day-by-day proposition to see what impact it has to the market. The market's certainly volatile, and that's the situation where traders need to be very considerate.
And the point also being that, we're not out of the woods yet, as Peter, you rightly said, because the businesses are yet to come back on board until 9th or 13th of Feb. The businesses are shut, and the expectation that they wouldn't even begin and the normalcy would return only by mid of March. Kunal, what is your sense? Because the first quarter is something that most of the banks and brokerages already seem to have written off now. This is where much of the demand impact would be concentrated. Within the whole of the metal pack, is there something that comes to your mind could perform better?
I think the major factor which needs to be seen going forward is the number of cases of coronavirus, whether it is declining or whether it continues to move up. So let us say if it starts declining, then I think the optimism will again come back in the metals market, because the fact is that China has infused $120 billion into their economy in a short term, which is a significant amount in order to prevent sharp fall from this coronavirus. And the moment it's subsidized, this number starts going down, and after that you see things normalizing within a month. So we are not going to see a major spike, but if the number of cases of coronavirus starts going down, then I think the metal should start moving on its own merit rather than just on the basis of fear. They have declined significantly. So in that case, I would recommend to do bargain hunting in metals like copper. So if you get copper at around say 425, that translates into LME at around 5650. I think that are good levels to go along for the good trading bounce back. Again, you can see copper back on MCX at 538, 540, and similar on LME you can see 5,900, 6,000. So I think one needs to observe very carefully what's happening with the coronavirus, if the number of cases are declining or not, and there are signals, early signals for that. If that happens, I think we are going to see some pullback in metals.
Peter, what is your sense? Do you have a favorite here in metals, or would you go with copper as well? Because that is what really seems to be exhibiting the maximum of what's happening around us. And also, how are you looking at the currency markets now? You did mention on how the dollar perhaps could continue to gain going forward as well. But with the kind of pressure that we've seen in euro and various other currencies, do you see that extending itself?
Manisha, if this ramps up, as far as the coronavirus impact, then there's only one metal to look at, and that's gold. So, the further softness is going to be felt across that whole base metal market. You'll see Brent, a considerable sell-off from here, probably another 10 or 15%. There's further softness, certainly for iron ore. Everything that China imports is going to, really hemorrhage. And then you're looking at copper, nickel. All of those markets have got continued softness if this coronavirus ramps up. And that's going to also be another stimulus for US dollar strength. So, you always pick the best house in the worst street. And the best house in the worst street is the US dollar. And the best house in the worst street from a metal market is gold. When you've got drama and you've got major concerns, they're the markets to be in.